Hello. Today we're going to talk about kind of an unusual concept. We're going to talk and teach you about the fact that you finance everything that you buy. Now, we understand that most people realize that when you go to a car dealership and you buy a car and you finance it over time, that there's going to be an interest charge. Or if you charge something on your credit card, that there's going to be an interest charge. And so we're accustomed to that type of financing. But we're going to suggest to you that even when you pay cash, you are actually financing, or there's a finance cost. And you say, well, that doesn't make any sense because, when you are charged interest by a bank or a financial institution, you understand that. That makes sense. There it is in black and white. They charge you 5%, 10%, 12%, whatever the amount is, and they give you an itemized statement concerning that. Well, we're going to shift your paradigm a little bit and help you see something that is really kind of valuable and important for you. So let's take a look at the idea that he who has the gold makes the rules, and of course that's where the finance companies come in. If you want to purchase something on time and finance it, they're going to set all the terms. They're going to determine how much the payment is, what the interest is. They're going to tell you what time frame they're willing to take the money back over, and if there's any penalties for late payments, and so forth. But we submit to you that you actually finance everything you buy, and here's the premise. The premise is this: you either pay interest or you give up the opportunity to earn interest. Either way, there's a cost. Let me show that to you. So let's say, for example, you want to buy this car that's on the screen, and that car is $30,000, and you just so happen to have $30,000 in your savings account, and it's currently earning 5%. Now, at the time of this recording, interest rates have just started to come up to where you might actually could get 4 or 5%. So it's not out of the realm of possibility. 3 years ago, 5 years ago, you couldn't get 5% on a savings account, but let's pretend that you can. And so if you're earning 5% on that account, and you want to buy this car, you want to pay cash for this car, you're going to withdraw those dollars. And from that point forward, those dollars are never going to earn interest ever again. And you say, okay, but I didn't pay a financing cost. And you would be correct about that. You're not paying a financing cost. But what you did do is you gave up the opportunity to earn 5%. So let's just see what would have happened had you not purchased that car. What would that savings account be worth in, say, 5 years? And we're not going to take into consideration taxes at this point in time, but let's just see. In 5 years, that $30,000 account would have grown to $38,288. So while you didn't pay a financing cost, you incurred a finance loss in that you didn't receive this $8,288 of savings or interest that you could have had you not spent your savings. Let's see what happens in 10 years. In 10 years, that $30,000 car that you paid cash for has now cost you the $30,000 that was in the savings plus the interest that you could have earned during that period of time of $18,867. So here's the key, is that you either pay interest or you give up the opportunity to earn interest. Either way, there's always a cost. And this is the lesson that we want to give you today, is that there's always a cost. And to take it even a step further, let's say that you're purchasing a vehicle, and the cost of that vehicle is $30,000, and you're financing it at 6% over 72 months. That would give you a payment of $497.19. Okay, now if you took that payment and calculated out the total amount that you would spend over that the life of that loan, it would be $35,798. Okay, so what that means is that you purchased the car for $30,000, you financed $30,000, and the amount of interest at 6% that you were charged is the difference between the purchase price and this $35,798. So you actually incurred a $5,798 interest cost. Now remember, the interest that you were charged was 6%. Well, let's do another calculation. The calculation we're going to do is trying to determine the volume of interest that we pay, because that's not something that typically we're taught or that we understand. We think in terms of, hey, I've been charged 6%. It cost me $5,798 of interest. But let's look at the total volume. If I take $5,798 and I divide it by the total premiums that we or payments that we made of $35,798, that comes out to 16%. So in this car loan, in this example, over that 72 months, yes, we were charged 6% interest, but the total volume of interest that we paid was 16%. And what we're trying to help people understand is that this volume of interest is significant in so many areas. In car payments, it's 16% or more. With credit cards, it could be far more because credit cards have much higher interest rates. Let's think of mortgages. Mortgages over a 30-year period of time, the vast majority of mortgages at 4 to 6% interest, you're going to pay about 50% of your total payments will be interest. So the principal might be $200,000 or $300,000, and the interest would also be $200,000 or $300,000. So the volume of interest is very, very important. So one of the things that we do with our clients is help them understand that you finance everything you buy, and help them understand that financial paradigm. And then we help them identify where all the interest charges are in their life, where the volume of interest is very significant. And we redirect their cash flows. We help them find a way to recapture some or all of these interest payments. We do that through a process called the family banking system, and we'd love to show you how that works. So if you take a minute and click on the link below to schedule your free, no obligation consultation with us, we'll sit down with you. We'll identify where your wealth transfers are. We'll identify where your financial inefficiencies are. We'll help you understand the volume of interest that you're paying out, and we'll redirect those dollars so that you end up having them accumulate and accrue in your behalf instead of the financial institutions. So click on the link below to schedule that free 30-minute consultation. And while you're at it, we encourage you to register for our financial education video series. You can click on the other link that's below. And also, why don't you, if you would please, subscribe to our YouTube channel, and you'll see many more of these videos. And so between all those different channels, between the YouTube channel and our financial education video series, you will begin to become educated about how you can create greater wealth faster with less risk. And we look forward to helping you with that process. Thanks for tuning in.